Hey guys, welcome. It is Mark Coe for Wednesday, October 25th. Kind of an exciting couple days here. It's been a lot more fun. Coming to you all month talking about levels and kind of giving lessons on levels, and been doing a lot of teaching. We're on this quest in our room, 50K for the year. And so this is our first month in October. Started our live 50,000 quest, and what that is my quest to hit 50,000 in profits over the next 12 months. So we're on month number one. Couple exciting deals over the last 24 hours been looking at. So I want to show you a couple things that I'm doing, and I want to show you a couple deals that some of the subscribers in the room they're finding on their own, this is the coolest part, that they're doing this and actually banking money. So I want to talk first about pound dollar. Now, I use a few different strategies and approaches within my trading. One of them is a model, the daily model, which is a longer term system. Then I use my my analysis, and I do what are called FX levels or US Open levels for the futures markets. So this FX levels, these are levels that are created the night before, and you guys hear me mention them a lot. But this is the one we dealt on yesterday, and this was actually a nice little, it worked out nice because we got some favorable UK news overnight. So the level I was buying was 31.20 to 35, and I got mine a little bit below that, but that's the level I'm buying, 31.20 to 35. So it doesn't do much yesterday. It doesn't really put me out of the money, and it doesn't really go in the money, and so I just hold it and I sit with my stops. Had a few of the people in the room that were at pretty tight stop that actually did get stopped out on that move. And what I'd like to point out is, that tick below, you have to understand when you're working a level, you have to understand that anything short of a close, that level's still holding, right? That level closed beneath, but reversed. And so it's looked at more as a rejection. So this is where the level is coming from. That was a rejection of lows. That just simply traded below. So it's kind of unfortunate for the few that got stopped out. Mine was darn close to getting stopped out, but wasn't. So the nice part, thinking about what this actually does for you P&L wise, right? So this is a trade with really low risk, 10 to 15 ticks maybe. And at that point, this thing rotates the next morning up 150 ticks. I took about 100 net out of it. So think about what that is on one standard lot. That's $1,000. Now, just in fairness of disclosure, I want to show you the other trade we did yesterday off of levels, so you don't think it's all great and phenomenal stuff. But here's what I would like to point out about what's going on. So this is Aussie dollar, and again with levels. So Aussie with the FX levels yesterday was a buy. So I bought Aussie right in here. I got stopped out overnight. The difference was I paid about 15, 16 ticks in the stop. So I did. I lost 16 ticks in Aussie, and I made 103 or something like that in the pound. Well, net those two out, and you're still sitting above 80 ticks. One standard lot, one contract, right? One 100,000 position. That's an $800 night. Not an $800 week, not an $800 month, just the night based on those two trades. So that's what's available there. Now, let me show you something that's kind of cool with what people in the room are finding. This is all from the work we're doing, the levels. These are people that are getting educated every day, that are exchanging ideas. So this is E-minis, right? This is the December contract. Get a sell-off this morning, the morning of the 25th. This is what you get. The market opens, you sell off from 62 down to where? This level. This is what people had pegged. Not because there was anything magical about it. No, it was simply the bottom edge that has been in place since early October. They recognize it as such. Same move down here, down to 42. Same move here, down to 40. The lows on the day so far are 41.50, right? So that's what they're playing. And the nice part is they're finding this on their own. They're finding it with their own work from what I've taught them, but they're doing the work. I don't take the credit for this one, right? They're doing the work. They're able to find that level. I'm providing guidance. I'm providing, what my thoughts are, but they're the ones doing the work. And that's really cool because from that move from the lows, 41 back up to a 57 high, you can do the math on what one contract is with 16 S&P points. That's another $800 move just from the lows to the highs intraday. So that's really good stuff. Keeping this idea up with the levels, right? I talk about levels every day. It's what I trade. It's what I do. It's all I know how to do. I'm a one-trick pony, but it's a pretty good trick. So here's the levels, euro dollar. Now the focus, and you guys have heard me say this on videos constantly, the big numbers are 1670 to 1720. That's the big block of support. Well, this is what is called a higher bottom edge. It's a more of a micro level, right? It's not as significant, but yet it's still playing. And we had some people in the room the other day buying this bottom edge. There was nothing to do but buy it. It was the daily FX level for Monday, and it was with a long bias in euro, and all it's been able to do is rotate up about 80 points. Well, what's 80 points on one standard lot? Again, 800 bucks. Do the math. What do you call the micros, minis? I don't even know what the terminology is, but a 10,000 position. It's not 800, but it's 80. So there's something there for everybody, regardless of the size you can put on. Here's the point: you want to be consistent with your approach, and you want to be taking those opportunities. And so the idea is that you have these levels lined up for you. You know what you will do in front of them. Here's another one: dollar yen, right? So this is, you can go over this day in, day out. It's repeating. So dollar yen, again, same level I've been talking about. This comes from a longer term chart. The last two times up here, it's 1436 is what we have on top. So it's basically 1385 to 1436 on top. Look what it's held every time it's traded into that. And true, dollar could end up breaking, but until it does, you have momentum that's hearing the financial journalists, guys, it's a strong dollar, buy the dollar. Maybe the dollar goes higher, maybe it doesn't. But the difference is, when you focus on the levels, what you're trading is the reaction to the level. And you get best pricing, best location. That's always the point. The reason I'm able to lose 16 ticks on Aussie and make 103 on the pound is because of trade location, right? It only works if that's the way the math works, which is big gains versus smaller losses. It doesn't work the other way around. Big losses and small gains is not the way to do it. More activity is not the way to do it. It's better activity. So guys, I wanted to mention on Saturday we're doing a webinar with the group. It's called Toast for Traders, Trade Thirsty. You should all get an email with it announcing about it, but we'd love to have you show up. I'm going to be on there with several speakers. Should be a lot of good information, fun. So it's Saturday morning, the 28th? Yeah, the 28th of October. So Saturday morning, check your email. You can always call or email Compass with any questions on how to register. But we'd love if you guys would attend, show up, listen. It should be a lot of fun. So I'm going to be speaking on that on Saturday morning. So I hope I'll see some of you there. And have a great rest of your Wednesday. Cheers.